Hey, Robert.
Hey, Yaron.
We're back. It's been a while.
It has. How are you?
Good, good. So since we last talked, we did quite a few shows on crypto and on FTX. Well, just in the last few days. I'm not sure exactly when this will be released, but just in the last few days, the former CEO founder of FTX has been arrested in the Bahamas. Sam is now under custody. He has been indicted, I think, four different counts of fraud, and it looks pretty bad for him. So that's actually now happened. There was this period there where I thought he was doing interviews as if nothing had happened. He was just acting as if everything was normal, when it was obvious, I think, to anybody on the sidelines that no, this was not going to be normal. So FTX has gone under, it's gone, and I think it's understood pretty well that there's real fraud here. This is not just a liquidity crisis. This is not something, they really did commit fraud. But now this has rippled onto the largest exchange in the crypto world, and we're seeing some trouble at Binance. Withdrawals, large withdrawals, and kind of the question out there is, who's next?
Well, it seems like until there's transparency, the only rational response to this is to get out of the organized exchanges that are not, pure custodians. And without transparency, you never know. Actually, even with ostensible transparency, you sometimes don't know. But if you can count the number of traditional exchanges that have stolen money from their customers in the last 20 years, I think on one finger. And it's more like once a month that you find out in crypto that this kind of stuff has been going on. So I would say it's until the sector cleans up its act. Nobody is willing to give a opaque exchange the benefit of the doubt anymore. And we've seen with Binance that you can, we've also seen this work though with Tether, is you can provide something that you can call proof of that everything's fine. And historically, people have believed that, and it looks like they're not believing it anymore.
Yes, and it'd be interesting to see what happens with Tether. I don't think we've heard the last, but so part of the struggle is they're trying to figure out, and this is natural in, I think, in a new industry, how to provide that visibility, how to provide, people with the confidence that they really have the assets that they claim to have, without at the same time giving up a big part of crypto, which is anonymity and the speed in which you can transact and move large sums of money. And yet at the same time, how do we audit, how do we maintain a situation where people are confident in your business model? And that seems to be what they're struggling with now. They realize certain business models don't work, or they're realizing the hard way they don't work. And now the question is, what does? And maybe nothing does, but they're trying to figure that out.
Well, it is human nature that none of that trying to figure out went on when things were good and you had a lot of cushion and time to do that. We would all prefer that everyone just trust us, and that they rely on our integrity, that we're in fact doing what we say we're doing. And that does work most of the time in society. But when you're talking about billions of dollars, it has never lasted for an extended period of time. Even in the best situations, there's doubt is going to arise. I don't think anyone thought that what's his name, George in It's a Wonderful Life, that he was stealing their money. But it didn't matter. When push comes to shove, when people are afraid they're going to lose their money, they're going to take the safest route, which is get into their hands. So there's not a lot of runway. Binance was a week ago was putting $2 billion into a rescue fund, and next week might be tapping that rescue fund.
And of course, all the attempts to audit so far have failed. And the promise was, there was this promise, and maybe it's legit, that the blockchain would find that there was some automated way to audit all these accounts and to make sure that what Binance was telling us was actually true. But it turns out it's not that simple, and maybe we need human auditors after all, at least for now.
Well, the whole point of the exchange is to avoid the blockchain. So the blockchain is very cumbersome and energy intensive at this stage. And so if you did every single transaction on the blockchain, it would be very slow and it would be very cumbersome. And
But
so
easy to verify and therefore easy to audit.
Yeah, completely transparent in the ways that you want it to be, and reliable and immutable. And all, you get all the benefits of the blockchain when you layer an exchange over it so that most of the transacting can happen off the blockchain. You don't have to deal with the inefficiencies on a ongoing perpetual basis. You can sort of batch it in. Then you introduce all of the problems that we know have always existed in finance. And I don't see that there's an easy solution to that dichotomy and saying, oh, we'll do it on the blockchain. Well, if you do it on the blockchain, then you don't need an exchange.
Yeah. So ultimately there's a lot of talk about decentralized exchanges, so that you're not, I guess, aggregating money across from a bunch of different people, or aggregating crypto from a bunch of different people.
I think what you're doing is you're giving transparency into what's going on inside of the exchange. That the exchange itself becomes more like a blockchain. So if you have a decentralized exchange, you don't have SBF giving special permissions to. I mean, you could, but if the code is available, then people will figure it out that there are these backdoors, and that Alameda can have infinite leverage and have access to the entirety of the FTX customer base's money. That would have raised a lot of alarm bells for anyone, even the greatest believer in SBF. So I think that there is a way to do it. When I say that putting it on the blockchain isn't the solution, that doesn't mean there isn't a solution. It's just not as simple as using the existing technologies.
So in the meantime, Bitcoin is holding out. It seems I think we were talking yesterday, and it seems like Bitcoin has become just an asset that has a high beta with the Nasdaq. It's a kind of a proxy for technology. Why would that be? I mean, what are the flows that are making that a reality?
Well, I think Bitcoin is fascinating what's happening because, despite the fact it's down drastically from its peaks, it continues to have periods of low volatility and to maintain significant value. The value looks bad compared to a year ago, but it looks great compared to 10 years ago. And so the way I'm thinking about Bitcoin at this point is that it's really a very pure indicator of sentiment about the future, about the technology future. And so you have this in every company. Apple is extremely valuable. Apple is worth trillions of dollars because they've done great things. They're doing great things, and investors can expect them to continue doing great things. So there's some combination of what we know today based on the past and the present, and what we think about the future. And if you take the future as being heavily dependent on sentiment, because the future is unknowable, there has to be some belief there, then Apple is mostly what's real about Apple's business. But there's still this element of sentiment. And if you go back 20 years, it was a huge piece of it that Apple's value was based on the things they were going to do in the future. Whereas Bitcoin,
and in a sense, that works negatively as well, right? I mean, you could have a company that's doing pretty well today, but people are just down on it, and that sentiment could actually, we've seen companies trade actually below what you think they're just the kind of performance today would justify.
And that was actually Apple in the 90s.
Yes.
And that's, I mean, all of these are good things because you want what's happening today to reflect expectations about the future, to reflect sentiment. If we're all excited about Tesla's prospects for bringing electric cars to market, and Tesla gets this massive valuation and GM doesn't, that's totally desirable if GM is never going to be able to replicate Tesla's success. And so Bitcoin, though, the past and present is just all about pricing. There's no use case, despite the fact that it is used for a use case that has to be value added from the perspective of the people with guns. And that's just not the case with Bitcoin. And by guns, I mean the people who are officially supposed to have guns,
Yep.
not the people who are using Bitcoin and
Regulators, yeah.
And so there has to be some value that's being built to society. So in the case of Bitcoin, it really does, it's starting to look like a pure sentiment indicator. And as such, it is going to be have a very high beta to. I'm trying to think of how to put this in normal people terms. It's going to be very responsive. It's going to be very, very responsive to people going, wait a minute, things are looking up for technology, and to things are looking down. So if you think about other assets that are like that, maybe the ARC Innovation Fund is another one that it's all based on what's going to happen in the future and not what's happening now or what's happened in the past. And you find very high correlations and very high betas in those assets.
Yeah, so right now, the last few days, the NASDAQ technology stocks have been going up, and Bitcoin's been going up with them. It's kind of leading a leading indicator. It seems to what we mean by a high beta is a beta more than one means for every movement of other technology stocks, the Bitcoin moves even greater. It moves in the same direction, but with more juice behind it, if you will. All right, so we're here on Wednesday. This will be released probably on Friday, but we're here on Wednesday, and the Fed is about to disclose that it's probably raising the Fed funds rate by 50 basis points. That's what everybody expects. It would be, I think, big shock if they raised it more or less than that. We got inflation numbers yesterday that were better than expected in terms of both CPI and core CPI. So the month-over-month rate has come down significantly. It's down to 0.1, which is in line with the 2% goal the Fed has. So why are they raising interest rates in spite of the fact that inflation seems to be down? And what do you expect is going to happen next year?
Well, month-to-month inflation is noisy. We've seen it running well over 1%, which would translate into at its peak 16 or 17% annualized. And 0.1% is great. So I don't want to take anything away from that, but I'm sure the Fed looks at it and goes, we're going to need to see a steady, consistent stream of these kind of numbers before we think about changing policy. And what we've always thought is the best case scenario is that inflation and interest rates meet in the middle, that this wasn't going to happen. You weren't going to get disinflation without interest rates going up. But if interest rates had to go up to 16%, that would be pretty traumatic for the economy, and for the unemployment rate probably spike dramatically. And so it continues to look like that could be happening. We haven't had any additional shocks. We've had sort of steady improvement in terms of people adopting to the energy markets that were roiled by the Russian invasion, the supply chains adapting, and you've got huge drops in the cost of moving stuff from China, at least to the West Coast of the United States. But I assume globally, this is all true. And when I say huge, I'm talking about 80, 90% drops from numbers that we had never seen before. But things going back to normal. And that's very encouraging. Now, we haven't met in the middle in the sense that if you say, okay, well, if 1 month rates are a little noisy, then you need to look at the annual rate or a 6 month rate or something. But if you look at longer term, then inflation is still higher than where the Fed is. And so the Fed is looking at this and saying, well, we're less accommodative than we were, but we still have not really put the clamps on inflation. And just a basic rule of thumb would be that the interest rate would need to be higher than the inflation rate. And that's particularly true when asset markets are doing so well. If you look at the 10-year interest rate, it's been running in the 3.5 to 3.7%, which is well below where we expect the Fed's fund to be after today, and well below where inflation is over any longer term measure. So if you're sitting in the Fed meeting, you're saying everything is going our way, let's not screw it up, which means interest rates continue to go up till we see a meeting in the middle. Hopefully inflation comes down fast, so that happens sooner rather than later. But the thing that I do not expect next year is a quick pivot to chasing the inflation rate down. Right now, we're looking at 4+ interest rates and headed to maybe 5.
Yep.
And of course, who knows? It could go higher. It could end up at 4.5. But until you get a meeting in the middle, you are going to continue to raise. But until you see inflation at a sustained 2% or below, I don't think you're going to see a cut, particularly if you're at 4.5 or even 5%, because having the interest rate at, say, 200 basis points, 2 percentage points above the inflation rate has traditionally been viewed as being pretty neutral.
Yeah.
So it might be a little tight, but if you're erring on the side, particularly if the unemployment rate has stayed low and you want to err on the side of not getting a rebound in inflation, I wouldn't be shocked to see no interest rate cuts in all of 2023. But at some point, if we meet in the middle and inflation continues to go down, then there'll be a negative shock that is on the downside for inflation. It could be an economic growth shock, or it could be a new source of energy that becomes more economical, or a new discovery of like. You could easily point to fracking as a positive shock.
Oh, absolutely.
That brought inflation down.
Yep.
And if that happens, then I think the Fed will cut aggressively. As a Federal Reserve governor, keeping interest rates low and having inflation low is just perfect. Everyone loves you. Nobody's yelling at you.
Well, except savers might not love you, particularly when you keep interest rates at what is really a negative real rate. I mean, we always learned that interest rates should be inflation plus a real rate, right? So if inflation is 1 and another real rate, the real rate is 1, then the interest rate should be 2. And yet we've lived through an era where interest rates were being kept close to 0, where the real rate was negative. And that has to have economic consequences. That has to have distortive impact on the economy in one way or the other. And it'd be interesting to see when everything turns around, if they're willing to go back to 0, if that's where they think now is the new normal, or whether they'll try to go back to, because right now 4.5%, we lived through much higher interest rates, and it was considered 4.5% was considered low. That was a low Fed funds rate. That was 2007, I think, last time we saw 4.5, and we've had this weird decade where everybody expects 0. And I wonder if that, and it looks like, given the 10-year, it looks like markets are expecting us to return to 0 at some point.
I think 0 was a consequence of the financial crisis.
Yeah.
And the fact that 0 didn't produce inflation until 2021 is an artifact of that. And we could have another financial crisis that completely messes things up for another decade. But when I say low, I think more of like 2% inflation, 2%, 0 real interest rate, which is a weird thing to think about if you look at history. But today the economy, technology, the world, it doesn't resemble history. It's quite different than what things were historically, and it might be that a 0 real interest rate on risk-free assets is the new norm. But negative, I don't see how that can be sustainable in the indefinite future.
All right, one final question. What do you think about the chances of recession for next year, given what the Fed is doing and given inflation?
Well, just based on history, it seems very high. And the question is it a mild recession, which people hardly notice, or is it a more severe recession? And right now, every month, I'm raising the odds of mild and lowering the odds of severe. I hate to give probabilities where I don't really have a strong opinion, but at this point, it seems like it's 50-50. And this is the first time all year that I've thought the Fed had an even chance of navigating a soft landing. So I'm more optimistic than I was, but I'm certainly not counting on that.
But of course, we saw in the 1970s, we saw the Fed respond to rising inflation by increasing interest rates. Inflation comes down a little bit, and then as soon as the Fed reverses, inflation picks up again. So, I mean, it's hard to extrapolate from the 70s to today because so many things are different. But some things also the same. So it's hard to tell if they defeat inflation now, they've defeated it, or if it just if it's something that comes back repeatedly. And maybe some physical policy changes need to happen. Maybe running these massive deficits is not good policy in the long run.
I think all of that is true. And that's why I think there's a good chance that the Fed does not cut rates next year, even if there's a mild recession. And I have a question for you, though, before we get off. Because everything, we keep seeing more and more about Twitter, the Twitter files. And I don't want to talk about the politics of Twitter or Twitter of the past. But the thing that's really struck me is how righteously smug the mainstream media is about Twitter's problems. Twitter's flailing around right now. There's no question about it. And it strikes me from an Ingenuism perspective that these are just people who have no idea how learning, other than book learning what is already known, how learning happens. The way that Twitter will eventually, if they do, I'm not guaranteeing.
They might not. They might fail.
The way they figure things out and do something really interesting and transformative to the company, but also to society, is to try a lot of things and discard what fails and build on what works.
I think the sad reality is that mainstream media is so focused on politics and so focused on the content, the political content of what's going on Twitter, that, so if this was a opposite political perspective, they would be celebrating the experimentation. They would be celebrating all of that. I don't think it's not that they don't know it. It's that they, and you could argue there was a lot of celebration of SBF, right, of FTX, when it was convenient partially because he had the right political agenda, right? He was giving a lot of his wealth to Democratic candidates. So sadly, I think that our mainstream media on both sides of the aisle is very infected in everything they report by the politics of it. And they're not objective about it. And I think you're absolutely right. I mean, I think some of what Elon Musk is doing is ridiculous, but I also recognize that this is going to take time. He's trying different things. He's doing it on the fly. And he's experimenting, and he might fail. But what he's trying to do is super difficult. I think much more difficult than he expected, which is part of why he paid so much money for it. I think if he'd realized how difficult this would be, maybe. And he's dealing with not only the business of it. The business of it is hard enough. He's dealing with the politics of it, and the politics are complicated. He got in this row with Apple, where he accused Apple of all these things. And so Tim Cook had him over to the Apple compound, and they came away best friends, I guess, because suddenly Elon Musk has changed his tune about Apple. I wish we'd had transcripts of that meeting. That would have been fun. But he's a little childish, just as a personality. He says things that are stupid. He acts out of impulse in ways, and because it's Twitter, I'm sure some CEOs are like that anyway, but we don't know. But Twitter, everything is public. Everything is, talk about transparency. Wow, is there transparency here? And we see it, so we're evidence of it. But at the end of the day, Twitter was in spite of its success with the number of people, it was a failing company from a business perspective. He's trying to create both business success and to pivot it philosophically and politically. And that is, wow, that is a massive challenge. And it's not easy. It's fun to watch though. I enjoy watching it.
It's a lot of entertainment in a new dimension. So I'll end with it. I read about this experiment once, and I don't know the experimental design, so I'm not vouching for it, but it's a cool story, and it's completely aligned with what we think and why Elon Musk would be, a centibillionaire. So the experiment was to give 3 groups a handful, a few bags of marshmallows and a few packages of spaghetti, and give them 30 minutes to build as tall a structure as possible that would stand on its own. And the three groups were a group of youngsters, the kindergartners or second graders, but they were under 10 years old. So a group of children, a group of engineers, and a group of MBAs. And the MBAs failed miserably.
Yep.
The engineers designed and built a pretty impressive structure, but the kids built the tallest structure, and they did it by just jamming marshmallows into marshmallows, and when it would fall over, they'd figure it out, and it didn't look as elegant, but it was as far as what the stated goal of the mission was. So I think there's a lot. I don't think it's a coincidence that Elon Musk occurs as childish and has had such success in such varied areas of.
And of course, he's a combination of this childishness and the engineering mind. I mean, he has an amazing mind. If you talk to people who've worked for him in SpaceX, I mean, he has these brilliant ideas that nobody else comes up with, and he solves real engineering problems, and he's willing to fail. We've talked about this in the past. One of the real unique things about SpaceX, and I think about Musk, is his willingness to try something, fail, move on. Elon Musk did the same kind of philosophy at Amazon. And I think people underestimate that. And yeah, maybe that does come from a certain, in childhood, we build towers, they fall down, we try again. It doesn't, the kids who cry every time the tower falls down are probably not the kids who are going to become centimillionaires.
That's right.